Welcome everyone to tonight's Fox Markets Investor Webinar. Today I'm joined with East Imperial. I have with me Tony Burt, who's the CEO and founder, and Andrew Robertson, who's the CFO. They'll both be taking us through the group's current presentation before taking some questions at the end. Now, we've had a lot of questions from the investor community. However, if you have a question you'd like to ask, please use the comment box on the right and we will try and get round to them. So I'll now hand you over to Tony and Andrew and see you at the end. Thank you.
Thank you, Fran, and thank you to Vox Markets for having us. I thought what might be beneficial is just to do a bit of a quick investor presentation for you, just to kind of reaffirm our sort of positioning in the market and also give everyone a bit of a flavour on progress since listing last July. So without further ado, just for the benefit of the audience, we were founded in 2012 in New Zealand and Singapore. We didn't start bottling until 2013, and our first market that we ever sold into was actually Singapore, then closely followed by New Zealand. We produce and market a lot of branded beverages that we sell throughout Asia Pacific, the US, which I'll come on to, and pockets here in Europe and also in the Middle East. The current portfolio is 11 flavors. They're there on the right-hand side presented. We have 5 tonic waters, soon to be 6. We also have a dark spirits selection of Thai dry ginger ale, Mombasa ginger beer, and also our Kima cola. We also have a grapefruit soda, which is really helping our drive in the US with the popularity of tequila, a soda water, a lemonade, and finally, but not least, we do a collaboration with the Royal Botanical Gardens of Kew here in London, whereas we make a Royal Botanic tonic for them. I think it's also important to let everyone know, because we are aware, and we will talk about it a little bit later. We're not being available in the UK yet, but we are addressing that. But our products are coming in a 150ml bottle size, which is proprietary to us, and that's important to us because that's a perfect pour, so a customer can put in their single or their double of their premium spirit in one bottle of East Imperial. There is no wastage, and that's the perfect pour. Our philosophy as a business from our very inception has always been to create products which are sort of steeped in tradition and authenticity. The gin and tonic is obviously an incredibly famous cocktail, arguably the world's most famous cocktail, but it's also steeped in a lot of history. And when we started the brand, we felt that a lot of that wasn't actually being talked about. And so we created a product based on a 1903 family recipe, and brought that to market. And you can probably tell on our website we talk a lot about the ingredients and actually where they're from and the history behind them. Also, we target, just like our major competitor, a section of the beverage industry which has really been driven by this idea of premiumization. So that's the idea of people actually buying better spirits and upgrading to better choices. And so our branding is, we like to see it as quite iconic, and the design aesthetic is really to kind of spark the sort of the passion or the spirit of exploration from over 100 years ago. And the picture here on the right hand side is the Orient Express, and it's naturally a place where East Imperial plays well and is actually served on. So that's a little bit about the brand. More recently, I had a meeting with these guys today, the spirits business, and we won 8 medals this year here in London for 8 of our products. And 2 of them are best in class, our grapefruit tonic and also our grapefruit soda, which we're very proud of. And then we also won 3 gold medals for our ginger beer, our Kima cola, and Thai ginger ale. And that's really important to us because that allows us to tell a very strong story on the dark spirits strategy that we're working on, not only in Europe, but more in the US. And also our yuzu lemonade won an award as well, our yuzu tonic. So we're very proud of that. But it's also a validation of, of the quality of our products. Selection of our clientele. Our strategy has always been very, very simple. Since the inception of the brand, is to be found at the very, very best restaurants, hotels, bars, and events globally. We are fiercely proud of being an Asian Pacific brand. That was our first markets. That's where our home is, and where we have some great clientele. Here's a selection of them. For the audience, Ritz-Carlton in Shanghai, the Six Senses in Fiji, there's a number of very enviable clientele that we have, and that's continually growing throughout the region as obviously COVID restrictions are lifted, particularly in Asia. Some of our US clientele, again, we work with everyone from the Peninsula Hotel to the Soho House Group, Popper Hotel Group, the Faina Hotel, which is the #1 luxury hotel in the US, and found and once again in some very high-end and luxurious on-trade accounts. Again, this is where the brand being positioned as ultra premium naturally plays and fits, and has been our target for some time now. We've got proven success in multiple markets, and so as I said, we started in Asia Pacific, in New Zealand, Australia, Singapore, Malaysia, and over time, 2014 was our first year. We've sold coming up to 2019, prior to COVID, around 250,000 cases. Obviously, we were impacted, which we talked about initially in 2020, being very focused on trade, a lot of closures, as we all know about, and that impacted our business. But it was pleasing to see we had a strong return last year, as we announced recently to the market, and really pleased to talk and to say that momentum's continued into 2022, which is very, very encouraging for what we're trying to do. Also, I think it's important as well, just to sort of let people know how revenue contributes from different regions. And you can sort of see prior to COVID, it was pretty much split down the middle for Asia Pacific, and the rest was made up with Europe and the US. 2020 changed things a little bit for us as we played a closer game to our region. And you can sort of see it skewed at somewhat to 75% being the APAC region. That's slowly correcting itself, and we kind of see it being back to sort of 60 to 50% this year. But obviously, as the US, as we'll come on and talk about, comes online, the US be a greater contributor to that as well. So really just want to talk about our strategy. It really hasn't changed since we originally listed the business. It's still to focus very much on this high-end on-trade and luxury into the market. And we're seeing a lot of that come back online. It's really encouraging, obviously, to be back here in the UK and see that things are moving along at pace here. But also we're starting to see that in the US. New Zealand, Asia's been a little bit slower, but we are pleased to see that actually returning. So we're very much focused on our bread and butter, which has been the on-premise, luxury on-premise. But we've also pulled forward our plans to be more multi-channel. And with that, I mean is off-premise, specialty retailers, and also specialty liquor stores as well, which we're well on our way down in New Zealand and also pockets of Asia. And starting on that journey in the US now as well. But the other part of it is also direct to consumer. I think, I was having this conversation with some people today as well, how home drinking is actually a real thing now. And that's been encouraged by what's happened over the last two and a half years. And so people have become very good at making great cocktails at home. And that's very much a growing sector and market for us. So we'll continue to focus on that. And we are just half a dozen kind of strategic focus points that I'll just quickly go through. US expansion, we've talked about it a little bit in the market. It's front and center of what we're actually doing at the moment. We signed a national distribution deal with RNDC, the second largest distributor in the US, earlier in the year. And I'm pleased to say that all 11 states are now onboarded. We shouldn't underestimate how long it takes to get things up and going, and we've managed to do it. So that's very, very encouraging. Phase 2, once we get these ones up and going, we'll start looking to go further with RNDC, which I'll come on to as well. We've also pleased to say that we've actually hired our team there now. We've got a head of sales, Mark Zonghetti, who was brought on board last November, and Mark's built out his team of experienced sales professionals, regional sales directors for different regions, which are working closely with R&DC in different parts of the US and areas which are important to us. So they're all on board now. The last one started in California with us last week. Also, US bottling is our #1 priority for operational priority for this year. So we're pleased to say that we're going through quite an exhaustive process of choosing a co-packer, and we'll be ready to announce something over the coming months. But that's work going very well. That'll allow us, obviously, to eliminate a lot of the headwinds and challenges we have with logistics and freight that everyone's experienced across the world at the moment, but also be able to react and supply the US market quicker rather than shipping it from New Zealand. There's obviously a sustainability angle there for us as well, which is important. APAC expansion, as I said, it's the cornerstone of our business. It's where we're from. It's where we grew our business, where we started our business and grew our business. We announced last year, again, another key distribution agreement with SUTL Group, who work with people like Brown-Forman throughout the region, not only Singapore, but Indochina. And so we're working closely with them at the moment as well as we roll out as markets come back online in the Asia Pacific region. Direct to consumer, we continue to work hard on that. We set up Amazon Marketplace last year. We've got a goal internally of being seen best in class and online. And I hope that, if any of the investors will notice, and the community will notice, if you do go into any of our websites, we're very proud of the way we present ourselves. It's a big part of what we do, not only online, I would say, but in all touch points. Supply chain efficiencies, we've got to gain more efficiencies in our manufacturing supply chain. Obviously, that ties quite closely to US bottling, but other opportunities as well, which we're working on, which I'll come on to shortly. And of course, new product development. We're in this business as well to bring great award-winning and world-leading products, as I mentioned earlier. And we've got some exciting new products coming down the pipeline as well, which we're ready to release, which we'll touch upon shortly as well. I think, given the focus on US distribution, I think it's important just to talk a little bit further about that. Having a great product is one thing, but you've got to have great distribution. Otherwise, you're just not going to reach your customers. We really do see, and everybody else, I think, would agree that distribution is fundamental to this business to get our product out there. In the recent years in the US, and I think this is really important, particularly for the UK investment community, there's been a lot of consolidation in US distribution, drinks distribution in the US. And so that has kind of been ongoing, but where it's actually led is to be three major players for spirits and wine distribution in the US. One is Southern Glazers, which is the largest, which the world leader Fever-Tree is with. Second largest is RNDC, who we're with, who we've signed an exclusive distribution agreement for 5 years with. And third largest is Breakthrough, which has Q Drinks, which is again which is an American brand. So it really feels to us that the drawbridge is up and the barriers to entry into the US and get good quality nationwide distribution is set. And so, we're really excited, and I think it's just really important to reiterate why we're focusing so heavily on that US opportunity, because it's real, and we're very excited about what we've got ahead and where we can take the business in the US at the moment. Here is just a map of RNDC's current distribution reach. To give you an idea of their scale, there's 9,000 employees to RNDC, so they're a big business. They're 11.9 billion in US dollars revenue in 2020, and also they're ranked in the top 25 Forbes list of America's largest privately held companies. So they're a serious player with serious reach into most of the US, or particularly where we want to be in the US. So this is their footprint in yellow. Again, they are acquiring a couple of new distributing companies, one I think more recently in New York as well. So they're continuing growing, and just sort of underlying my point around what's going on in the US distribution market. Here are our focused states that we're in at the moment, and we should actually put Nashville on there as well, Tennessee. So and this is where we've been focusing our efforts. You can kind of see on the West Coast and on the East Coast, California is a huge market. Obviously, Arizona is one of the fastest growing luxury markets in the US. Then all the way up to pockets of a lot of money and wealth up through Seattle and Oregon as well. So we're very focused and single-minded of where we're taking this brand and the first steps as we roll out in the US. And as I said, we've also hired the regional sales directors for those regions as well, who started with us. Also this, I talked about it earlier about contribution, as we kind of roll out the US, we kind of foresee the US being sort of 40% of the business by 2025, Europe about 20, and APAC and direct to consumer being making up the other. But it does sort of give you a sort of everybody kind of an idea of where we're focusing our efforts at the moment, and the US is front and center of that. At the moment, I know there's been a couple of questions coming through around margin. I think everybody in this industry is being margin challenged at the moment with a bunch of unprecedented events going on, which I think we all know about. So we will working on a number of different areas to get gross margin up to 50% by 2025. Last year we were challenged at 19%, but we have a program in place that will quickly run through that we're currently rolling out at the moment. One is US bottling, as I meant, that will give us a margin lift of 12% as we bring bottling onshore into the US rather than New Zealand and shipping it over. European bottling, we are committed to making an entry in the UK market. I know that's been something that's asked of us a lot when we're going to be here. It's just trying to ship stuff from New Zealand at this time is incredibly expensive. It doesn't make much commercial sense, as well as our focus, as you could probably get, is very much been on this US opportunity and making sure it's done right. But we are having a number of conversations in the UK at the moment. And when we do come to this part of the world, we will likely be bottling here rather than trying to ship product here. We have a number of other things going on around our packaging and bottle optimization. Obviously, as we grow, economy of scales kick in, but there's a number of other initiatives which the team's working on to kind of get to efficiencies there. Production optimization as well. We're getting better at it in terms of actually producing to order as well and sending direct to our distribution partners globally. So that's continuing. And there's a number of other things, sort of like general raw material cost increases as well as we're looking at doing a slight price increase in certain regions of the world. I mean, we haven't put our prices up in nearly since our inception, to be honest with you, for example, New Zealand, and everybody else is slightly putting it up. So we're looking at what we think is what we can do there as well. And so all of this will contribute to obviously lifting margin. And I know that questions come through quite a lot from the investor and the shareholder community. Another thing I just want to talk about is current NPD. And everything we want to do with our brand is, just have an unparalleled market quality and something that's very distinctive. I think everybody, it's great to have a product that looks great but it also it's got to taste great as well. And again, the awards we've won recently has kind of validated that. But we've had some great feedback on our product since we started the business. So really looking forward to bringing this to the market. It's been bottled now. I know we talked about it when we listed the businesses on the NPT roadmap. We're bringing out a light tonic water, which has got the lowest calories of any tonic water on the market. And it's not compromised in any flavor as well. So this took us a while to get right, but I think the team back home have done an incredible job of bringing in this one to market. It was slightly delayed due to a supply chain challenge of certain ingredients, but I'm pleased to say that it's actually bottled and the first containers are making their way to the US at the moment. It's about to be released in Asia Pacific as well. So it's really excited to bring this. Light tonic water is a big part of what is sold in terms of tonic water in the US as well. So to have something to compete in that space is incredibly important for us as well as we roll out into 2023. So summary, and then we'll take some questions. There is no one data point that will kind of give you the size of the premium mixer market globally, because there's things that kind of get thrown in there that could be Coca-Cola, for example, and things like that. So, but we, from speaking to a few analysts in the city, we kind of see it being worth around £20 billion by 2025. And we assume that the total mixer market will be about 10% of that will be premium. And we really do believe that there's only a true few global players that can actually positioned to capitalize on this opportunity. I think another thing which has really become prevalent to us since being able to travel and come to the UK is that a lot of what you see here in this UK market is only in the UK market it's not in the US and it's not in Asia Pacific. So, you have a lot of competitors in this particular market, but we don't see them in other markets that we're actually operating in and capitalizing on. So I think that's a really important point as well. The current strategic focus on the US market will see total revenue, as I said, contribution of 41% by 2025. We assume, because we're really focused on this ultra premium end of the market, the high end of the market, our competitors are becoming cheaper. They're found in, what I would say, channels which are really reserved for mass brands or economical brands, and you can't build premium in that channel. And so we've got a more disciplined approach to the way we do things. So we kind of see that 2%, and I think we've been quite conservative, of the total market would be ultra premium, and potential value of that's £400 million. And that's obviously what we're trying to go after. And we're trying to catch a modest 7.5% of that. And as I said, we've got the distribution now in place. And so that's our focus, and that's what we're going after. So yeah, that's thank you. Give you a bit of an update of what we're up to.
Great. Thank you, Tony and Andrew, for that great presentation. We've had a lot of questions come in from the investor community, so we'll try and get through as many as possible. But just to kick off, talk us through the story so far, particularly in terms of how your accelerated expansion into other channels, especially off-trade and direct to consumer e-commerce. How is that going?
Yeah, it's going very, very well for us. I mean, as I sort of mentioned, Fran, in the presentation, rightly or wrongly, going into COVID, we were very much an on-trade focused brand. We were really just focused on that luxury end of the market. We've had to change somewhat our strategy now and go after off-trade. And so places like New Zealand are further along, for example, on that journey than, say, the US, as we're just rolling out. So it's, so going into COVID, what was it, around sort of 20% was off-trade?
Globally, yeah.
Globally.
Yeah.
And maybe Andrew can tell us what it is now in terms of...
It's certainly improved. It's in about 30%.
Yeah.
We're seeing now, and that's really coming from some of those key local markets for us. New Zealand, where we're strong, always been strong and on-premise, have got good brand recognition, and now leveraging that into the off-premise environment.
I think it's a really important point to say is the way you build the brand is by putting into these right places, what we call having, an exceptional drinking experience or an East Imperial experience in one of these great locations, and then people need to go and find it at the right place. And it's important, as I said, to have a disciplined approach about where people find it and how they find it. It's just not about throwing it, in our view, into all channels and then somewhat eroding, brand equity in the process of doing so. But it's going very well. As I mentioned as well, we're working closely with our distributors now in APAC on a bunch of opportunities. We've had a couple of really good wins also with the team in the US as well, with some premium liquor retailers as well, which we're rolling out and we'll be announcing.
We're early in our journey on e-commerce. We started selling Amazon in the US, which is going well. That we're building a momentum with that channel. So we're really hopeful through the back end of this year and into 2023 that's going to be a strong channel for us.
That's great. Now you talk about this premiumization and luxury, and how that is very much ingrained within the brand. How has consumer behavior been affected by sort of larger economic shifts, particularly in China?
I think it's a great question. I'll cover off the China piece first as well. We're not heavily exposed to China because it's never been a major contributor to our APAC number. We have sold there. And it is obviously down at the moment, but it's not having a massive effect on what we're doing in Asia Pacific. In saying that, we are committed to expanding in China, and that'll be something that we'll work on probably back into this year and early into 2023. In terms of premiumization and what we're seeing, we think that we're still seeing growth in all our channels, and it feels to us that at the end of the market that we're operating in, and the kind of consumer that's engaging with us and drinking our brand is a little bit more not being heavily impacted by these inflationary pressures, if you will. I still think people are going out to restaurants and bars and still treating themselves to great drinks. So we're not seeing too much of that ourselves. I think some of our competitors might be a little bit more exposed to it, as they're in, as I said earlier, in different channels than we are. You want to answer that?
Yeah.
And in terms of this positioning yourself as ultra premium, how does that compare when looking at competitors?
I think it's a great question. I mean, ultra premium, it's just not one thing we do. I mean, I think it's a series of things we do. I mean, you just can't create a brand on one thing alone. And I sort of mentioned it earlier, it's one thing to taste great and to look great, but it's also the way we present ourselves and the where we're found, which is all contribute to the fact that we can call ourselves that ultra premium. Obviously, a really important part of that is having a more disciplined distribution approach and ensuring we're continually found at the very best places. But I don't think it's just one thing that's creating it. I think it's a bunch of things that we're actually doing and doing well, we believe, that's allowing us to stay in that space.
And it's a discipline, isn't it? It's a discipline to say no to some channels and some locations. And once you do you say at a place like, go to a place like Walmart, it's tough to come back from that.
And how do you distinguish that when it comes to how you market the brand?
In terms of like how we make those decisions? Yeah, I think we sit down as a team and sales team and evaluate. Obviously, we tell our distributors the type of places that we want to be seen and where we want people to experience the brand. But then also we sit down with the sales teams as well and evaluate the opportunities they're actually working on. I think, particularly places like the US and Asia, there's just a proliferation of high-end and luxury on trade. There's, I think it's over 4,500 five-star hotels alone in the US, so there's plenty of areas that we can actually go into. So it's really just having, as I've been saying, a disciplined approach to it and going, okay, does this feel like a place where we should actually be? And and it's going to continue to give us a halo effect of being this ultra premium brand, and that's really the lens we put on to make these sorts of decisions.
Great. And can we talk in a little bit more depth about your expansion plans in the US and, dare I say it, in the UK as well?
Yes.
Yeah, I think I touched a lot on it, Fran, about the US. We're really excited with the opportunity, and it's really encouraging to see the initial sales that the new team is generating, and that's keeping us really motivated and excited to keep pushing on and doing what we're doing. And so the US will continue to be that focus, as I've said a few times now, and just get that done well, build that relationship, a strong relationship with our partner RNDC and with other brands, premium brands in that North American space. And again, the same really in Asia Pacific, but Asia Pacific has been a little bit slower, as I said, to come back from COVID. Obviously, China's still restricted. Hong Kong is shut down as well, which was a strong market for us. And Singapore, which was our home market to start with, they've really been challenged. And so, but we're starting to see that return, which is really, really encouraging. So we'll continue to go wider and deeper in Asia Pacific. And the brands at a little bit of a different stage than it is in the US. But yeah, so there's slightly different tactical activities going on in different regions with the teams and the sales guys to bring that to the fore. We are pleased also. We've just, we do have a head of sales for APAC. We've just hired a regional sales director and someone to look after key accounts for us in the Asia region as well. So that's going to become a big focus for us.
Great. And how, just to have a bit of context here, how would you characterize the North American market compared to others? And alongside that, why it's so important to the company?
I mean, I don't, there is by volume an incredible amount of gin, drunken in North America. But comparatively, dark spirits and tequila, which is the biggest selling spirit now in the US, there's other opportunities that sit outside tonic water or gin. And I think that's an important thing to say. We're just not a tonic water or gin and tonic sort of aligned company. We're a premium mixer company that works with any sort of premium spirit. So, we see different things being sold in different regions. We see certain trends quite early in what's going on. We foresaw this kind of tequila trend a while back and created the grapefruit soda for that very reason for the US market. So we're continually watching what's actually going on. Each region, even within the US, is very different. So if you look at what goes on in Miami comparative to what's going on in Chicago, it's very, very different, right? They're two different seasons. One's very hot, one's very cold sometimes of the year. So, and all this, we've been in the US now for a wee while. It's just all great learnings for us, and knowledge, which is invaluable for us as we kind of define our strategy moving forward, different parts of the US.
It is an exciting market right now, the growth of premiumization. Tony touched on the competitive landscape there, being very different to what you see in the UK, with the three key players in the premium space. So it feels that for us, it's a very exciting time to be there and growing.
Now, as I understand it, with another major peer having experienced a bit of difficulty in terms of expanding into the US, what are your strategies in terms of overcoming certain challenges, whether that's for distribution, recruitment, etc.?
Yeah, I think I'll cover the distribution off first. We've got distribution, right? So there's no that's not going to be a challenge to us now. We've got a great partner with RNDC, and it's going great. In terms of recruitment, Mark came with him when we hired Mark as our head of sales. He came with a lot of industry knowledge and a lot of contacts as well. So I think the combined experience for the team that we've hired is around about 120 years of distribution experience of premium products, of drinks in the US. So straight away, we've just got this incredible amount of experience that's been injected into the team, not only for the US, but for all of us. We're just learning from new team members, which is really, really exciting for us. And I think the third one, I think, which is an important one, supply, getting things into the US has been somewhat of a challenge, but that's just not for us, that's for everybody. It's well documented. And that's why it's been important for us to bring bottling to the US. And, that's why it's been the number one operational priority for us this year. And we will do that this year.
And just touching on your new products, how integral will the development of these new products be for your growth plans?
I think the light tonic water is really integral to our growth plans. I think this wellness trend is real as well, and it's big. It's not just something which we see in the US. We see it in Asia Pacific. We see it in Europe as well. So having a tonic water, as I mentioned, which has got the lowest calories of any premium light tonic water on the market, is without doubt going to contribute to our growth plans. We've got a couple of other products in the pipeline as well to bring out. We want to give light tonic water a bit of clear space to launch it, to get it out there, rather than trying to just launch a bunch of things all at the same time and messaging someone to get lost about why we're doing these things. But we do have another one earmarked for later this year and further out into 2023 as well. But yeah, always incredibly important. It's always interesting for me personally to see, you launch a product, it may take a little while to gather some momentum, and then it becomes a major contributor to revenue. And I think a great example of that would be our yuzu tonic. I mean, 6 or 7 years ago, yuzu wasn't really known or understood, and bringing a tonic water up wasn't a massive seller for us, but it's in some regions our biggest seller now. So it just sort of shows you the ever-changing kind of consumer and the way they're educating themselves and discovering new flavors and profiles as well. And I don't think that's just us doing that. I think it's a category job that everyone's contributing to, and people are becoming better and smarter on what's actually in the market and what they actually like.
And how is current trading going?
Do you want to talk about that?
Yeah, I think it's been very good. The US is ahead of expectations at this point. As we've rolled out these initial 11 states, they've come on board really strongly. And we expect to see that continue as we move into that heavy summer season. So we're really happy with where the US is. APAC is returning. As Tony talked to earlier, it was impacted early in the year with the COVID restrictions, particularly down in our part of the world. And the ongoing restrictions we've seen in Singapore and Hong Kong, but it is returning. It is returning strongly. We're seeing New Zealand come back. We're seeing Singapore come back. So it's a good start to the year, and we're looking forward to a strong finish.
That's great. Now, how do you plan to manage certain supply chain headwinds and cost pressures that obviously we're seeing all over at the moment?
you talk about that?
Yeah, we're keeping a tight eye on that. The freight costs increases and issues are well documented, and US bottling is going to help solve a piece of that for what is a key market for us. We've also got a number of initiatives underway to improve margin. We're looking at product optimization, packaging optimization, looking as we grow to remove waste from our logistics chain. I think Tony touched on it earlier. We're looking to be better at manufacturing and getting it out the door straight to the customer, moving double handling, both out of our New Zealand bottling facility and also as we open the US one. There's lots of opportunity in that space for us to improve and get better.
That's great. Now, one investor asked, can we expect to see gross margins up closer to 30% again, or even better?
Yes, absolutely. I think as some of these initiatives start to land, particularly the US bottling one, at the end of the year, we're going to see the end of the year getting towards 30 than those for that sort of last quarter. It has been challenged for the start of the year. And then we'll just continue to see that improvement in through 2023, back into where, that space we want to be in those low to early 30s.
I thought also just to add to that, rightly or wrongly, again, New Zealand is an extremely important market to us. It's a good margin market. I hope my distributor's not listening, but it is a good margin market for us. And because we're not having to ship things, we can make it and we can sell it straight into our home market. And having those prolonged and ongoing restrictions that have been put in place for a long time now in New Zealand, we miss summer. There was people just weren't going out because they weren't allowed to go out. And that impact margin at the beginning of the year as well. Because we just it's such a strong
March market.
Yes, such a strong market for that first quarter for us, typically New Zealand, and that was just a little bit soft because of the restrictions being placed on us, on trade particularly.
Understood. Now, you raised 3 million when you IPO'd and another 3.4 million earlier this year. Now, you have big expansion plans. So how far does this get you? Does this get you to profitability? What does it look like?
Yeah, based on our current plans and sort of the growth rate we're seeing, it does get us to profitability. We have enough funds and to get us to that point, which we're sort of seeing at the moment being the end of Q2 2023. So we're feeling fairly comfortable from what we're seeing. If we were to see that the US has been really successful in these initial 11 states and we want to roll out harder and faster, and we might want to look at bringing forward bottling in Europe or the UK, we potentially could go back to the market to raise additional capital. But that would be for faster growth than we're predicting right now. Based on the cash we have enough to get to our initial break-even point.
That's great. Now, finally, in terms of outlook, what can investors expect over the next year, 2 years?
More progress and success in the US, obviously, because it's a big part of our focus. I think, one of the things we enjoy the most is bringing great products to the market. And, we've really proud of the light tonic water we've just done. And it tastes great. So, we'll continue to innovate in that space and bring more, hopefully award-winning, world-leading products to market, because, that's what we love to do and what we see ourselves as being quite good at as well. I think, we're going to continue to go further, wider and deeper in Asia Pacific as well. Again, as I mentioned earlier, so I think we're going to start seeing some real positive news flow coming out of there and some great wins that we're working on, regional deals and what have you. So we'll continue working on that. And the other one, really, I think once we kind of get this momentum back and we see this thing coming up in Asia Pacific and the US up and running, I think it's just going to be faster growth, as Andrew sort of mentioned as well.
Yeah,
so
it's
looking, everything's sort of heading in the right way, which we're very, very happy about.
That's great. And I'm sure everyone watching will be excited to track them too. Now, Tony, Andrew, thank you both so much.
You're very welcome. Thanks for having us.
Thank you. And thank you everyone at home for watching.